Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on departmental accounting. This is lecture number 7 and you can find the other lectures on the chapter departmental accounting in the playlist section of the channel. You are given the following particulars of a business having 3 departments. So we have a Department X, Department Y and Department Z. Purchase units 1500 for Department X, 1000 units for Department Y and 2000 units for Department Z. Opening stock 200 units for Department X, 300 units for Department Y and 150 units for Department Z. Closing stock 100 units of Department X, 160 units of Department Y and 200 units of Department Z. Additional information. Purchases were made at a total cost of rupees 92,000. The percentage of gross profit on turnover is the same in each case. Purchases and sales are constant for the last 2 years. Selling price per unit. Department X rupees 20, Department Y rupees 25 and Department Z rupees 30. You are required to prepare departmental trading account. So here we have to calculate what is the GP rate. So step 1, we need to calculate the GP rate, calculation of gross profit rate. The purchase price per unit is not given, but the total amount of purchase is given and the units is also given. So it will be assumed, so we have to make an assumption that if all the purchase units are sold out, so then what will be the total sales if all the purchase units were sold out? So Department X purchased 1500 units, and if these units are sold out, then what will be the selling price? So the selling price per unit for Department X is at rupees 20 per unit. So if 1500 units are sold out, then total sales for Department X will be 30,000. Similarly, for Department Y, there were 1000 units of purchase and the selling price, this is the selling price per unit. If we multiply with the selling price per unit of rupees 25 and if the entire units were sold out, then there will be a total collection of 25,000 on account of sales. And for Department Z, 2000 units were purchased, and if these 2000 units were sold at the rate of rupees 30 per unit, then there will be a sales of rupees 60,000. So if we add up these three, the total sales is 1,15,000. This is the amount of total expected sales if the entire purchase units are sold out. And what is the cost of the purchase? Less cost of purchase is given at 92,000. So there will be a gross profit of 23,000. So the assumption in step 1 that if all the purchase units were sold out, then there will be a gross profit of 23,000 for a total sales of 1,15,000. Therefore, the GP rate is 23,000 divided by 1,15,000 multiplied with 100. You will get a GP rate of 20%. So in step 1, we have to calculate what is the gross profit rate. So please have a look at it. Then in step 2, we will find out what is the purchase price per unit. So in step 2, we will calculate calculation of purchase cost per unit. So for department X, the selling price per unit is given at rupees 20. So there is a gross profit of 20%. Therefore, the purchase cost per unit is 80% of the selling price per unit. So rupees 16. So selling price per unit for department X is rupees 20, which is given, and we have calculated the gross profit rate of 20%. And this 20% is applicable for all the departments. So the purchase cost is 80% of the sales price. So the purchase cost per unit for department X is rupees 16. So for department Y, the selling price is rupees 25. So the purchase cost per unit for department Y is rupees 20. That is 80% of rupees 25. You will get rupees 20. And for department Z, the selling price per unit is rupees 30. So the purchase cost will be 30 into 80% is rupees 24. So the purchase cost per unit, which is not given in the question, we have to calculate. So in step 2, we have calculated the purchase cost per unit. Now in step 3, we will value the opening stock. So valuation of total purchase cost, opening stock, closing stock, and sales for each department. So here I am writing department X, Y, and Z. So cost of purchase per unit of department X is 16 rupees 20 for department Y and 24 for department Z. Now there were purchase. So for purchase, I am preparing two columns, one in unit and the other one is in rupees. So there was a purchase of 1500 units for department X, 1000 units for department Y, and 2000 units for department Z. So what is the total cost of purchase for department X? If we multiply, we will get 24,000, then 20,000 and 48,000. Now we will value the opening stock. So opening stock, we have units and the amount. So it is given in the question, the opening stock of department X is 200 units, 300 units for department Y, and 150 units for department Z. If you multiply with the cost per unit, that is 16, we will get 3,200. This is the value of opening stock of department X. Then we will get 6,000 for department Y, and the value of opening stock for department Z is rupees 3,600. Rupees 24 into 150. Then the closing stock. Units and amount. So what is the number of units of closing stock for department X? It is given at 100 units, 160 units for department Y, and 200 units for department Z. So value of closing stock of department X is 16 multiplied by 100, you will get 1,600. 20 multiplied with 160, you will get 3,200. 24 multiplied with 200, you will get 4,800. So this way we have computed the purchase cost of each department, the opening stock, as well as closing stock of each department. Now the sales. how to find out the sales unit? So sales unit is equal to opening stock in unit plus purchase minus the closing stock. So 200 plus 1500 minus 100 is 1600. Then if you add up 300 with 1000, that is the purchase units, and subtract 160 units, you will get 1140. Then opening stock of department Z was 150. 2000 units were purchased, and this two will be added and subtract 200 units, you will get 1950. The selling price per unit is 20 rupees. This is selling price per unit. 20 rupees for department X, 25 for department Y, and 30 rupees 30 for department Z. So total sales of department X is 32,000, 28,500 for department Y, and 58,500 for department Z. So please have a look at the step 3, where I have computed the purchase cost, the value of opening stock, value of closing stock, and total sales of the three departments X, Y, and Z. So I have prepared the structure of the departmental trading account. So we will take up the figures that we have computed in step 3 and we will put it in this trading account. So first of all, we will write the opening stock, the value of opening stock. So the value of opening stock of department X is 3,200, 6,000 is the value of opening stock of department Y, and 3,600 is the value of opening stock of department Z. So I can write here 3,200. So all the figures are in rupees. 3,200 is the value of opening stock for department X. Then 6,000 is the value of opening stock of department Y, and 3,600 is the value of opening stock of department Z. Then what is the purchase cost? So the purchase cost is 24,000, 20,000 and 48,000 for department X, Y and Z respectively. So I can write here 24,000, 20,000 and 48,000. Then I have to write the value of sales. So the sales is 32,000 for department X, 28,500 for department Y and 58,500 for department Z. So here I can write 32,000 for department X, 28,500 for department Y and 58,500 for department Z. Then I will write the closing stock. This is 1,600 for department X, 3,200 for department Y and 4,800 for department Z. So here I will write in the trading account 1,600, 3,200 and 4,800. So what is the amount of gross profit? This will be the balancing figure. So we will get a gross profit of 6,400 for department X, 5,700 for department Y and 11,700 for department Z. Hope all the students have recorded the question and solution and have followed the process that I have adopted here to solve the question. In spite of this, if you find any difficulty in understanding, feel free to communicate with me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.